Hi guys, it's Stock Curry, and in today's video I've got all of the market news that you need to know for Monday. Plus we're going to talk about whether we're in a new bull run or possibly a bull trap. And I've got an update for you on Mullen Automotive. So let's get into it! The markets are coming off of their best week since 2020, and the markets ran up last week because the Fed gave some clarity on what they were going to do. Now, the Fed was also fairly dovish compared to what they could have done considering how high inflation is right now. They only said they were going to do a 0.25 basis point rate hike for each of their 7 meetings, which is a lot lower than some people were forecasting and predicting. And part of the reason was the Ukraine war and the concerns around that. But on the other hand, they had to raise interest rates because inflation is just extremely high. Now, what's interesting is when the Fed's forecast numbers came out, the market initially tanked. The market didn't start rising again until Jerome Powell came out and told us what he was going to do. And that essentially is being a lot more dovish than people were expecting. People were thinking there might be a 0.5 basis point rate hike at some point, but generally the Fed is predicting a 0.25 basis point rate hike for now through the end of the year for each of the remaining 6 meetings, which is fairly dovish considering how high inflation is. Now the question is, will the markets continue this bull run that started last week, or is this just a dead cat bounce? Well, when I've been researching this pretty much all weekend trying to figure it out, and I gotta tell you, it's very uncertain right now, but I'll do my best to give you both reasons why this could continue and reasons why it could go back down. So, first of all, the run-up, being that it is the biggest run-up since 2020, it kind of reminds me a lot of the April 2020 run-up where the markets came down very quickly and then they rebounded extremely fast. The last week really reminded me of that. At the same time, it also reminds me of prior bear markets that we've been in, both in the year 2000 and the year 2008, where the market ran up, but only to a certain point and then continued to go back down. You can see here on this 2018 chart how in the last bear market we had, the NASDAQ, represented here by the QQQ ETF, consistently bounced off of the 100-day EMA. Every single time it got up to the 100-day EMA, it bounced off of that and then continued going lower. Now, if we take a look at the chart currently, we can see that we're not quite yet up to that 100-day EMA yet. So I would not be surprised to see NASDAQ rise up to about $360, which is where the 100-day EMA is currently, and then bounce off of it and then continue going lower. So technically, I think that 100-day EMA level is going to be a key level for us to know if this is a dead cat bounce, meaning we're going to bounce off of it and then just continue lower, or if this is a new bull run, we're going to break through that 100-day EMA and continue higher. So I think this week is going to be really crucial to knowing and understanding how the rest of this market is going to go. Now, fundamentally, pretty much all of the bad news has already been priced in. I mean, there's really not a lot of bad news that could really come out that could push the markets lower. I guess the only real bad news that might come out would be if Russia were to attack a NATO nation, say Poland, for example, and that somehow started World War III. Obviously, that would be pretty bad news that would cause the markets to go down pretty fast. But outside of that, pretty much all the bad news is priced in. We have some good news actually on the horizon. For example, the Ukraine and Russia are making progress on their peace talks. If that happens, we'll definitely see the markets go up. Now, in addition to that, we also have some oil news coming out with Iran. Let's go ahead and talk about oil real fast. So as of the recording of this video here early Monday morning, the futures are up on oil about 3%. Now, oil is supposedly rising because of the Russia-Ukraine fears, but actually with the peace talks going on, I see oil could come back down from this. And in some really good news, Russia backed down on their demands in the Iran nuclear deal, so it's looking like the US and France and Iran are reimposing the nuclear deal. Basically what that would do is it would limit the amount of nuclear energy that Iran was able to have, and in turn, Iran would be able to now export their oil to other nations. So if this deal goes through, and it looks like it may be imminent, then that should cause the price of oil to go down. Now, as you know, we currently hold a CVX or Chevron put option, and so looking at some very specific CVX news here, union workers at a Chevron refinery prepared a strike on Monday. So that could cause CVX to go down even if oil goes up, but we'll have to see. I mean, it's only one refinery. So we'll have to see what happens with that. As I read through the article, it looks like they're going to try to keep the oil refinery online despite the strike. Not really sure how they're going to do that, if they're going to use scab workers or whatnot, but it doesn't look like it's going to impact Chevron that much, but it might. So we'll have to keep an eyes on CVX stock specifically, even if oil does in fact go up. Now, with the Ukraine war looking like we might end up with a peace deal at some point in the next month or two, and oil coming back down, it looks like the Fed might be able to raise interest rates a little bit higher. Front load is what it's called. And because of that, the CME Futures are now pricing in a 54% chance of a 25 basis point rate hike and a 46% chance of a 50 basis point rate hike at the next Fed meeting. So it's interesting that even though the Fed said they're only going to do a 25 basis point rate hike at each of the next meetings, that the CME futures are like, yeah, we don't really believe you. We're actually pricing in about 50% chance you're actually going to do a 50 basis point rate hike. So if the Fed were to do that, that could cause the markets to come down a little bit. So we're going to have to keep our eye on the CME futures to see if they start pricing in more and more of a 50 basis point rate hike, because if they do, that could push the stock market down further, especially the NASDAQ. And taking a look at the 2-year, 10-year Treasury yield curve, which of course is the best indicator of a recession that we have, it is down to 0.17. That is the lowest it's been in years. And just keep in mind that once this drops below zero, a recession will start within 12 to 18 months after it drops below zero. So no earlier than 12 months and no more than 18 months. And at 0.17, we are getting much, much closer to zero. It remains on track to drop below zero at some time in the next 2 to 3 weeks. Now, the other thing that you need to watch out for in the news on Monday is that there is a new variant of COVID, and health experts are concerned that we might have an uptick in these pandemic cases here in the United States. It's called the BA.2, and it is exploding in China right now. In fact, Disney just closed their Shanghai park on Monday due to this COVID outbreak in China. So I would not be surprised to see DIS stock fall in price on Monday. Now, let's talk about MULN. This is Mullen Automotive. This stock has been running up a lot over the past few weeks. In fact, it's gone from 50 cents to $2.90. I mean, a 600% rise over the past 3 weeks. And obviously a lot of retail traders are jumping into this. If you watched my market psychology video in the past, you know that this is basically at a point where we're in FOMO, or fear of missing out, and people are just buying it because it's running up. So let's talk about if this is going to continue to run up or if the top is near. So I want to point out, first of all, why it's come down. So the reason that it's come down is because the last earnings were absolutely dismal. They lost all of their revenue and they ended up with a $2 per share loss on their earnings. Now, prior to that, they were making money. Now, going into this earnings, they are expected to get that revenue back, and they are expected to start recording a profitable earnings once again of about 13 to 15 cents per share, depending upon which analyst you're looking at. The stock is rising because earnings are coming up, and people think that they are going to report good earnings, and that's going to cause the price to get back up to around this $8, $9 level that it was at prior. Now, if you take a look at what happened in the last earnings, you see it ran up massively going into earnings, and then of course as soon as they reported that really dismal earnings, it absolutely tanked. So it's hard to say if that's going to happen here or not, but what I really want to focus on is looking at this as a buy the hype, sell the news sort of stock. So really short-term play. And if we were going to do that, then based upon the way that this stock ran up in the past, it is just getting started. I know it's up 600% already, but I think we probably got at least another 3, 4, 5 days of run up before this thing tops out and starts going back down. Based upon what's happened in the past, I could see this getting back up to around, say $6 before it tops out and goes back down. So I think there's a chance for about another double up from here before it tops out. But after that, I expect some major selling no matter what the earnings are. So definitely a buy the hype, sell the news event. FOMO is in full swing here, so if you're going to jump in, I would only jump in for a few days, and then I would take my profits and get out before the rug is pulled, because eventually the rug will get pulled on this stock, and a lot of people are going to lose a lot of money. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what you're going to be buying this week. And I want to remind you that Webull is offering their best promotion ever this month, where you get up to 5 free stocks worth up to $9,600. That's right, 5 free stocks worth up to $9,600, and all you have to do is open an account and deposit just $1. That's it. So if you want to take advantage of that, you have to sign up using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, you'll get 5 free stocks worth up to $9,600. But I do want to let you know that that promotion is ending in a few days, and it does take a little bit of time to get your account set up and get the money transferred. So you definitely need to open that account now if you want to take advantage of that offer. The offer does end in just a few short days. Okay, if you're not a U.S. resident and you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. And finally, I want to remind you to hit that like button, subscribe, and click the bell icon and click all so that you can get notified when I release my next video. Tomorrow, I'm going to do a video on cryptocurrencies, and we're going to go through them and try to figure out which ones might be a good buy. So I hope to see you guys tomorrow. I hope you have a lot of success trading, and I will see you on Tuesday.